This is the volatility before the storm. When you see all of these things happen, when you see the largest accumulation of gold by the central banks ever over the last 18 months, when you see countries continuing to move away from the West, including our allies, and using gold and silver as a way to de-dollarize, and the price means nothing. And I know it's hard to hear that, it's almost hard to say it, but it's true.
Andy Schectman is confused and skeptical about the sudden drops in the price of silver. He questions the logic behind such actions and argues that it does not align with rational decision-making for maximizing returns. Andy Schectman also talks about the accumulation of gold by central banks, countries moving away from the Western financial system, and the use of gold and silver in the de-dollarization.
Look, I haven't read why the price of silver got clobbered today, and whatever it is, it doesn't make sense, because if we look at what happened last week when it got clobbered, 25,890,000 ounces, or 5,178 COMEX contracts were dumped in 15 minutes. So no one in their right mind who is trying to maximize a return on any asset being sold would dump that kind of quantity at the open. It's done for effect. It's a drive-by shooting. It's done to demoralize. But in reality, you take a step back and say, what kind of idiot would ever do that? And the answer is no one who is trying to maximize a return. It is someone who is trying to do this for effect. And that's why when you see all of these things happen, when you see the largest accumulation of gold by the central banks ever over the last 18 months, when you see countries continuing to move away from the West, including our allies, and using gold and silver as a way to de-dollarize, then the price means nothing. And I know it's hard to hear that, it's almost hard to say it, but it's true, because the price action is being betrayed by the massive drawdowns that we continue to see on COMEX and on the LBMA. And I think it's worth noting, it really is worth noting, that if we talk about just the amount of deliveries that we've seen this year, we've seen almost 13,000 silver contracts stand for delivery. That's this year. That's 65 million ounces that have stood for delivery. That's over 2,000 tons. And when you talk about gold, over 240 tons have been delivered out of COMEX since January 1st. And I read that 55 tons were delivered last week in the 7 trading days up to when I was reading this on Tuesday or Wednesday. So you can see that deliveries is a rising tendency. We are seeing more and more deliveries, quietly though. Massive deliveries off the LBMA. The price and the price action is meaningless when you see big deliveries across the globe and a continuing drive to de-dollarize into this August meeting, which now our allies are requesting access to, where supposedly they're going to issue a new currency pegged to commodities.
Andy Schectman focuses on the significance of deliveries in the precious metals market and the increasing trend of deliveries, especially for silver contracts. He highlights the ongoing massive deliveries and draws attention to the volatility in the market. Andy Schectman suggests that the price action doesn't make sense in the broader context, and discusses the maneuvers made by dumping large quantities of silver at the opening.
This is the volatility before the storm. And normally they say the calm before the storm. But if you look at a big move, generally in history, a big move in a market, it's usually precipitated by a great volatility leading up to it. And this volatility, which makes no sense in the greater scheme of things, this price action, it makes no sense in the greater scheme of things. It makes sense to what the playbook that they've used for a very long time. And when you see the type of maneuvers that they're making by dumping 25 million ounces at the opening, I think it reeks of desperation. And to me, we're getting close to that moment. So one last thing I'd like to say, in the 3 years that I've been doing this with you, I don't know that there's been a better environment right now, because of really there's been a little bit of apathy in the market right now, and it's slow. In the entire precious metals space, it's slow. And I think price, premium, availability, it's as good as it's been since 2020. And so people who are looking to do what the biggest money in the world is doing, I don't know that there's been a better time to do it in the last 3 years.
Andy Schectman discusses the increasing significance of Brics, Brazil, Russia, India, China, and South Africa, and their plans to introduce a new currency, likely pegged to gold. He highlights the interest of various countries, including France, Belarus, Japan, and Australia, in joining Brics.
There are 25 countries now that have formally applied to Brics. We're told that on August 22nd, in their South African meeting, their annual meeting, that they are going to discuss or introduce their new currency. This is a report that Jim Rickards talked about, where they are actually talking about coming out and introducing what we've been talking about a long time, this commodity-backed currency. What makes all of this even crazier, in the last few weeks we've talked about Macron and him pushing back against the West, embracing the Chinese, buying liquid natural gas in yuan, striking a 51-point agreement with China from 5G to military engagement. He, according to the South African president, has requested to be present at the meeting in August. So you have France and Belarus, the two countries, European countries, that are now showing interest in joining the Brics. You have Japan, who has just purchased a whole bunch of Russian oil above the benchmark that the U.S. set of $60 or something like that, and then purchasing them at around $70. That does not make the West and their sanctions happy. So things are beginning to really speed up as far as I'm concerned. And when you talk about the significance of these countries, I'd like to read something. He's talking about this new currency that will likely be pegged to gold. We talked about gold being revalued to a tier 1. We talk about all the countries who have repatriated their gold. We talk about the European countries who not only have repatriated their gold, but many of the countries like France have exchanged their gold that doesn't meet LBMA standards. In other words, they have bars that don't meet the purity. It's as if they're all preparing for some event by repatriating, by accumulating, by exchanging out bars that don't meet LBMA standards. It's as if something is coming.
Andy Schectman delves deeper into the preparations made by countries in anticipation of Brics' new currency introduction. He notes that various countries have repatriated their gold and exchanged bars that do not meet LBMA standards. He emphasizes the momentum behind Brics' growth, involving not only economic factors, but also the alignment of military and energy interests among member countries.
China and Russia, you have two of the largest gold producers in the world, ranked 6th and 7th respectively. With Saudi Arabia and Russia alone, he talks about you have two of the three largest energy producers in the world. He talks about with Russia, China, Brazil, and India, all members, you have 4 of the 7 largest countries in the world measured by land mass. 50% of the world's wheat and rice production, 15% of all the gold reserves. You have, when you talk about India, China, Brazil, you have 4 of the 9 highest population countries in the world. Not to mention, when you talk about Russia and China, you have 2 of the 3 largest nuclear arsenals in the world. And by every measure, population, land mass, energy output, GDP, food output, and nuclear weapons, Brics is not just another flimsy, let's just pass it off, it'll never happen. This is a growing, real entity. And when you see Mexico, Saudi Arabia, Turkey, France, Belarus, rumors of Japan and Australia, they're all showing interest and or applying. When Macron strikes deals with China, buying liquid natural gas in yuan, 51-point agreements, including military engagement, and requesting to be at the Brics summit, it's more than just a feigning interest. And so I think this is a really big deal. And if what Jim says is true, and they do indeed introduce their new currency pegged to commodities in their August meeting, things are going to be very interesting.